Bleeding Edge subscribers, we are in the second week of what I believe will be the most important 4-week stretch that the stock market will see in 2024. And the news media is already out with the headlines. The AI hype is fading. That's according to the Washington Post. From boom to bust, the AI bubble is only heading in one direction. That's The Guardian. And a guy I respect a lot, Jeff Lee Gundlach, says the AI craze in stocks is like a dot-com bubble. So could the AI skeptics actually be right this time? Have tech stocks run out of fuel to continue to move higher? After all, we heard from Taiwan Semiconductor yesterday, and shares of the chipmaker are down over 10% this week alone. TSM is the exclusive fabricator of the red-hot NVIDIA chips that are being bought up by the AI companies out there. If AI was so hot, why did TSM shares go down so much? We also heard from ASML. Like TSM, ASML has a monopoly on the cutting-edge lithography equipment that is required to make bleeding-edge AI chips that NVIDIA and others make. Shares of ASML are down nearly 9% this week alone. If you look at the stock charts and read the headlines, you'd likely be convinced that the AI bubble is about to burst. But like most things in life, really the devil is in the details. TSM's CEO said this about the company's products. Smartphone chips, which still make up 38% of TSM's business, decreased 16%, and demand is just gradually recovering. Personal computer demand was described as being slow to recover. Traditional cloud server demand was described as being slow and lukewarm. Internet of Things, or IoT, and the consumer remains sluggish. And finally, automobile chip inventory continues to be overstocked. The one bright spot was AI. TSM said AI-related data center demand is very, very strong. And that shouldn't come as a surprise to anyone who follows technology and understands what's at stake here. AI reminds us of the dot-com bubble because it quite possibly is the most groundbreaking technology we've seen since the internet. The idea that human knowledge can be democratized into a computer system is actually groundbreaking. Many times over the past year, we've highlighted stories here on the Bleeding Edge about how AI is not only changing lives, but it's saving them. AI is not only just changing lives, it's changing how big companies operate too. Google's $2 trillion search engine is facing competition for the first time in decades. Apple is being forced to innovate on a phone that has essentially been the same for a decade as well. Other companies like Adobe are having to revamp its entire product line. Even the chip makers like AMD and Intel are scrambling to come up with designs that can compete with NVIDIA. Over the next several weeks, all of these companies will be reporting earnings. With inflation and interest rates directly impacting the consumer, I don't expect the numbers to be good at all. Remember, the investors who believed in the internet during the dot-com boom were ultimately right. But those who forgot basic rules of investing got burned and ultimately missed out. Stop losses, taking profits every once in a while, and diversifying your portfolio, these aren't just buzzwords thrown around to be ignored. Discipline is going to be key going forward. Over the years, I've seen many investors and friends of mine even get excited about themes like cryptocurrency, electric vehicles, NFTs, marijuana stocks, 3D printing, alternative meats, you name it, only to get burned out when the trend reversed. AI is more than a trend or a fad, but it doesn't mean it's going to be a straight line up. Just like the dot-com boom, there's going to be plenty of failures along the way. But AI is the most exciting technology we've seen since the internet age, and in many ways, great investment opportunities are just beginning. That was the Bleeding Edge for Friday. Have a great weekend. I'll see you again next week.